Okay, Nvidia has helped push the Nasdaq near to all-time highs. This is the AI chip leader. It has risen more than 150% this year. What happens to the broader US market if Nvidia takes a hit, though? Our guest is advising his team to reduce positions now. We're joined by Greg Halter, Director of Research at Carnegie Investment Counsel. Thanks very much for coming on the show.
Thank you for having me again.
You feel that Nvidia, time to lighten up on the positions there?
We do. I mean, not many companies grow to the moon, and you just mentioned it, up 150%, and over the last year, I think it's 250%. Those are substantial gains, and our clients that own the stock have some pretty big holdings.
Yeah, you found that in your client books, quite a few people perforce have seen the weighting go up with the rise in the stock?
They definitely have, and that's one area that really comes into play if you have an investment policy statement that says you can't have more than 5% or 10% in any one holding. You're kind of forced by that to make some moves, such as a reduction in that position. So in some respects, your hand is forced.
What about Apple? It looks like the market is shrugging at this stage, at this AI update. There are no great surprises so far, apparently.
That's what it looks like. I would not discount Apple and what they're doing. They've obviously taken their time with their AI strategy. They've got 2 billion plus devices out there in the world, great ecosystem, tremendous cash flow and free cash flow. And as we know, it's a very good company, but it's very hard to grow a $400 billion revenue company. So that's what they're kind of struggling with, if you will.
But your choice, if you had to choose, your pick right now would be Apple over Nvidia if you were putting new money to play?
That is correct. We would choose Apple over Nvidia. You got both market caps about the same, yet Apple has 5 times the revenue and 2.5 times the EBITDA that Nvidia has.
Oh, that's interesting. 5 times the revenue. Yeah, it's such a massive company. You see rips appearing in the tech rally, including weakness in software companies. Can you give us more on that?
Yeah, it's a great point, great observation. You've seen some of the names like Workday and Salesforce.com and MongoDB. We think what's happening is, a company only has so much to spend on equipment, software, and right now there appears to be this huge race on the AI side, and that may be causing some of these other software companies to be left out there in the cold, if you will, not getting their share as the focus is on AI. I mean, we think this is probably creating some buying opportunities here, which is always good in the market that you have buying opportunities.
Now, I want to get this straight. You think that we could hit an air pocket, to use that expression, in tech. Why is that?
Well, you've got sales on the Nvidia side. And if somebody sneezes and says, well, maybe we don't need all these, or, oh, we found out we were double or triple ordering, all of a sudden that may create this air pocket of demand, and you could have a big drop in some of these tech stocks because we know how Wall Street works. It always goes to extremes one way or the other. I'm not saying there will be one, but it's something to be aware of. We've got the whole energy side of things, sustainability in terms of the grid and how you power, because these are 5 to 10 times more, use more energy than a typical Google search. So that's another area that you have to pay attention to, is where's all this energy, where's it coming from?
So the utilities have been riding a wave of optimism here. Is that overdone? I mean, people saying, well, electricity is a growth industry again.
There's no doubt that we need to harden the grid. We need more transmission lines. We need more power. Whether or not it's going to, double in a year or two, probably not. You've got permitting, regulatory cases. We know we need this. It's just a matter of how it gets deployed. We actually would rather play it from the standpoint of the ancillary companies that are providing the infrastructure into both the grid side of things and the AI. The Eatons of the world, and the Hubbles, and the Vertivs, and the Nvents.
Sorry, what were those companies you mentioned there at the end?
Eaton is a company that does electrical equipment, transformers and such, global business here in Cleveland, Ohio. Vertiv does liquid cooling and many other parts of the data center business. Same with Nvent. And then Hubble is on the electric side as well. I mean, these are been fabulous companies over the last 3, 4, 5 years, and fabulous businesses for many, many decades, actually, but they've really hit the sweet spot of what's going on out there currently.
That's interesting. Hubble Incorporated. And I'm sorry, what was the second and third company? Give us the ticker symbols, if you would, please.
Sure. Eaton is ETN. Vertiv is VRT. And then Nvent is NVT.
NVT. Okay, so that's Vertiv and NVT. Okay, because Nvent Electric PLC. Because I know people want to investigate those companies. Thank you very much, Greg, for joining us.